Thank you for joining us at xm.com for this Forex Preview video. I'm Cristina Marujos. Joining me today is investment analyst Marios Hadjikyriacos. We'll be taking a look at the Fed minutes out on Wednesday. The headlines these past few days, Marios, have been dominated by President Trump's health, of course, as well as whether a stimulus package will arrive before the November 3rd election. However, we can't overlook the Fed minutes. They will give us a deeper sense into what we should expect from the Fed going forward. For now, at least, the Fed has stated it isn't in a hurry to provide any more measures. However, could the minutes paint a different picture?
Hello, Christina. I very much doubt that. The Fed back in September announced that it will be more tolerant of inflation exceeding its 2% target. It basically signaled that even if the economy improves drastically, it still will not raise interest rates for a very, very long time. So by doing this, the Fed hopes to make its own job easier. If you convince investors that inflation is going to overshoot and the economy will run hot for some time, that may become a self-fulfilling prophecy and help power up the recovery. Now, investors want to see some new measures to back up this new paradigm shift. So if you want inflation to run higher, what are you going to do to get there, in a sense? And that's where the Fed did not deliver. Chairman Powell kept the door open for more stimulus and doing more QE, for example, but his tone suggested there's no rush to do so. Essentially, for me, the Fed has gone from all in to check in poker terms. Now, I don't think the minutes will tell us anything further on this. We've already heard from a lot of Fed speakers lately. They haven't let on any hints about more stimulus. So if there was consensus about doing anything more, we would probably know already. Plus, it makes sense for the Fed to wait at this point because the Fed wants to see what Congress will do first. How much more will the government spend? Once they know that, they will also know how much more stimulus they should add themselves. So I don't think these minutes will bring any revelations, and if anything, we might see some similar market reactions like we saw after the policy meeting itself. That was a stronger US dollar and slightly lower stock markets.
You mentioned the dollar, so let's have a look at the greenback. Could the Fed minutes dictate its moves going further, or will it still be greatly affected by political developments?
Well, I think political developments are the name of the game right now. We might see a little bit of movement on the Fed minutes, but that will be just a blip on the radar in a sense. What really matters right now is whether this week ends with a stimulus deal in Congress or not. That's the single most important determinant for the markets right now. Now, if we see an agreement, that could boost stock markets, but hurt the dollar, both because of less demand for safe havens and also because of deficit concerns about the sustainability of US debt. Now, if we see no agreement, we could see the opposite market reactions, but right now, the tea leaves, in a sense, suggest that the deal is more likely than not. However, to close this off, I would caution that the time window for reaching a deal is closing very fast, and a lot of optimism for a deal is already in the market. So it's a two-sided risk, in a sense, and we will probably get big market reactions either way by the end of the week.
Marios, thank you for joining me today, and thank you for watching this Forex Preview on the Fed Minutes here at xm.com.